Hey, this will probably just be a very chill video. I just really wanted to provide you with my opinion and the overview of the entire markets currently. I think this entire transition from value stocks to growth stocks and now this entire idea of growth investing. So we look at a lot of big companies like Tesla, Palantir, where a lot of funds are being congregated in all these high growth companies. I'm not here to tell you that they're overvalued. Everybody will probably have their own valuation technique and everybody has their own different risk tolerance and risk profile. So you do whatever you want to do. I just really came across this interesting snippet from a 1 hour long podcast from Sense Invest. I'm quite sure some of you actually do subscribe to their channel. I'll be playing a short snippet of the podcast at the end of this video for you to understand where he's coming from, and I actually do buy into his argument. Sidetrack though, I've actually received many comments or DMs saying that, oh, you're just running an Alibaba cult channel. You are resistant to listening to the other side of the argument. How can you support CCP? How can you support China? Or don't you know all the disastrous things that they have done? The funny thing is, given my personality, I love understanding the opposing thoughts and opposing viewpoint because it allows me to have a deeper understanding and a deeper appreciation of the reality. That said, many of the comments are loaded with your own presumptions. I would like to give you the middle finger, but I'm an extremely cultured man. So even if you scroll through my comments, I always reply nicely to all the quote-unquote hate comments. If you have an opposing view and you bother penning down your thoughts in long prose and long paragraphs, don't worry, I'll be reciprocating by understanding your viewpoint and dishing out my own opinion. If all they do is just hashtag communism, then I'm probably not going to waste my time there. And just to provide you with a little bit of context, I'm just going to show you the screenshot of all the creators that I follow that are pretty much anti-China. And I can just show you a few of their thumbnails as well. All of them are just trying to drive views about this entire property crisis, how China is losing its mind, how China is losing control in governing its country. I like to keep myself updated with all the opposing viewpoints. But whenever I look at all these different videos that are being pumped out on YouTube, it just really provides me with an avenue to practice critical thinking. Always understand that whenever someone makes a video or makes a documentary or makes an opinion piece or whatever on the internet, they probably have their own biasness. Please do your own due diligence to take them apart. That said, of course I know that I'm inherently biased as well. But if you were to really think about it, if I'm resistant to listening to people and all I do on YouTube is to just hype stocks up, why would I bother talking about Alibaba? And I've actually received multiple comments saying that, oh, I'm pumping out so much content surrounding Alibaba just so that I want to earn the revenue. Please, if I want to earn revenue, I wouldn't be picking a company like Alibaba. Don't forget, YouTube is paying creators based on view count. Alibaba is such a trash company to talk about, especially on the internet. So many people currently are so anti-China. Who the heck wants to invest in Chinese equities? And a lot of my viewpoints are not necessarily the most popular one. If I want to drive views, what should I talk about? There are so many. Tesla, Palantir, AMC, GameStop. Those are the ones that are getting all the attention today. If I really bother about revenue, Alibaba will be the last on my priority list. That said, I believe that the viewers can sense whether the creators are being genuine or not. I really just wanted to present what I believe in. With that in mind though, I would believe that by putting myself out there, I would probably be able to attract like-minded people, people who share the same investment philosophy, people who share the same values, which is more important in creating a community rather than just earning money. With that, back to my opinion on the current market. I think especially during these seasons of earnings call, if you to really take a closer look in all the growth stocks, particularly like Beyond Meat, Peloton, Paysafe, the market essentially shaved around 20 to 30% of their market cap in one single day. And as discussed by Sense Invest, in order for a company to drop down 20 to 30%, there's probably a very big disparity, maybe like a fraud allegation. That said, most of all these high growth companies essentially just missed earnings or provided poor guidance. And just because of poor guidance, companies can lose 10, 15, 20% of its value. And one of the few classic examples for big companies, by the way, in the hundreds of billions of market cap, include companies like PayPal, Visa, Master. Of course, I understand that markets are always forward-looking, but really 10, 15, or even 30% for all these high-growth companies in one single day, what is the current state of the stock market? Which is also why majority of my investments are tied into Alibaba, because Alibaba seems to be a value play, yet at the same time, it's also a growth company. So it's up to you to decide who you want to invest in. I understand that many YouTubers have a sizable amount in Tesla, but by judging this entire phenomenon surrounding all the growth stocks today, I really don't know what to expect, and I have been rotating up. Feel free to leave in the comment section down below what do you think of today's market, and I will also be playing a short snippet from Sense Invest. Side note, Sense Invest is also quite critical on China, and he has been staying away from Chinese equities because he believed that the risk reward is not congruent. I beg to differ, but there is always something to learn from each other, and I'll be playing what he said. With that, I'll see you in the next video, but more importantly, I'll see you on the moon. Goodbye.
So the question that I have for now is like, are we in a great re-rating? Are we approaching some sort of top? And I don't know. But I think if I could smack myself more, is not rotating aggressively enough into valuation plays, value stocks, stocks where the DCFs tells me something and I'm just like, these cash flows are worth more than this. So from here on out, I'm seeing these big moves, and there's a part of me that's like, do I want to own growth stocks from a macro view? Do I want to deal with the drama of having to go through 25 to 50% drawdowns based on earnings expectations? That's not the game I want to play. I'm literally here on YouTube because I don't want to go back to a long short hedge fund and have to deal with earnings. I want to pick the next Amazon, but it was a lot easier to pick Apple and Amazon when they were overvalued at 9 times EBITDA, 12, even 15 times EBITDA, than it is Tesla's the next Apple. You don't understand. I get that, but now you're buying at like 200 times EBITDA. So maybe the content will suffer because the clickability will go lower here. But I'm going to try, and you've heard me say this, I'm going to try to avoid the great re-rating downwards. And so just to teach for those of you that haven't been like in institutional investing, rating, so like re-rate is a term in like investing that means a step function change in valuations. So that's why the thumbnail of this is valuation sound, right? So like, for example, right? At one point in time, 7 years ago, you might buy an industrial widget manufacturer that has low growth, but 10% free cash, or that you'd buy it at like 7 times EBITDA. But on you pick another point in time, that thing would be worth 10 times EBITDA. So that re-rated upwards to a multiple expansion, right? Multiple expansion. And if it goes from 10 times EBITDA, is the industry trades at 10 times EBITDA and goes down to 7, that's a re-rating downwards. So we call that multiple compression because the 10 times multiple went down to 7 times multiple, compressed. And that happens for a whole host of reasons, blah, 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 blah. For example, Relic members know the whole cannabis industry has been re-rated downwards. Let's look at Trulieve. And they tend to trade together. They've re-rated downwards from the hype of cannabis stocks downwards. They've lost half their value. So I don't know, like it's a case-by-case basis with the DCFs, et cetera. I'm going to try to stay true to a 10% discount rate, depending. And I'm going to, I think we have to be really, really careful on valuation. Because what you don't see during this period of time, from peak tech bubble and onwards, is people made a lot of money. You can still make a lot of money in a bear market. Because at the end of the day, there are opportunities. There might just be less opportunities. And you're fighting against some tide of selling, a general selling tide.